Good afternoon, friends, or good evening for those of you on my side of the pond. I hope you guys are doing well. I am going to wait for Instagram to tap us in to let you guys know that we're here, and then we can get going. Nice to see y'all. So let us know where you're tapping in from. Hope you guys are well. Hope you guys made money in the markets. I say that every week, and then I'm like, because we made a lot of money in the markets. So I do hope that you guys are also making money in the market, since that is obviously what we are here to do. Yeah, so for those who aren't in the Discord, we had an amazing kayaking ride. There's an island between Montenegro and Croatia that has I guess it's an old prison or something, so we kayaked out there and then across the bay to the other side and then came back to the house. So we went with a little group of friends. It was very nice, and we actually went at sunrise, so we had to wake up 4 o'clock in the morning. I won't lie, I was a little bit terrified what it would be like to wake up a 7-year-old and 5-year-old, soon to be 6-year-old now, for a kayaking ride at 4 o'clock in the morning. But my daughter woke up totally fine, and my son kind of woke up like a drunk man. He was like, wait, are we vampires? Is that why we're awake at this time? And I was like, vampires? What made you think about that? But, kind of woke up like a drunk, and then he was all on board. So we had a great time. I have to say, I'm feeling the level of fitness required for such activities. So, if you want to start doing long kayaking trips, you better get in the gym first before you do that. Word to the wise. I obviously was a little underprepared for the situation, but I survived, and it was great. And the most beautiful thing was seeing the sunrise over the mountain. So the kids enjoyed that, seeing all the pink and orange and all the colors. So that was, we had a great trip. It was wonderful. And the kids certainly enjoyed it. Well, Instagram is always on this kind of delay, so I don't know what's going on. But we'll get started because we have a super busy week in the markets, a lot of macroeconomic news. Last week, we kind of had smooth sailing. It was really easy going. And let everybody know where you guys are tapping in from. Let your friends know that we're on, because Instagram just likes to be, they like to wait till we're 15 minutes into the show before they tell people that we're on. And I'm like, what is this? 15 minutes is a lot of information to be giving people. But yeah, so last week we had smooth sailing. We had very low gamma. We didn't have negative gamma, which is what everyone was afraid of or nervous about, that we would end up having some massive kind of drawdown in the markets. But we didn't. We had very kind of smooth sailing, a lot more kind of consolidation than downward activity. We did have a stronger, overall, just more positive activity, and we continue to have positive gamma above us. So I think that until something really kind of rocks the system and forces people to invest in long puts, it's going to be difficult for institutional investors to justify it. And part of the problem is that oftentimes when you want to have a long downside position, so you just buy long puts, when you have a volatility event, the down move is so fast that if you don't kind of catch your gains at the right moment, you might get a bit of the gains, but in comparison to the downside activity, you don't get that much return. And then oftentimes you get these V-shaped, K-shaped recovery where it's just like as if, being prepared for downside activity was just kind of a waste of money. And part of that has to also do with just the cost of volatility. So when people are nervous about these volatility events, puts start to get really expensive. Now, for those who trade SPX every single day, like we do, one of the things that you should have noticed by now is that if you were to buy, let's say a strangle whether it's a long strangle or a short strangle, and you made them equidistant from the current price, so let's say you made it 50 points above and 50 points below, the puts are always going to be about double the price. So you might see an 80-cent call side out the money call if it was 50 points above the current price, and then 50 points below the current price, it would be about $1.80. And so that kind of reveals to you how much skew is in those downside positions. So they cost a lot more. They cost usually more than double that of the call side position. If you look at the number of points away, if you look at deltas, then you end up with a much bigger skew. So to get, if you're looking at like a 15 delta on the call side and the put side, you would be like 40 points above and then 55 points below the current price on the S&P. So that skew causes puts to be a lot more expensive than calls. And when you have choppy markets like this, you can take risk to the upside because you're not going to be losing that much on, on the volatility piece. But with puts, if you are looking for a cheap kind of protective strategy, just buying long puts can end up getting really expensive, and you may not even get the activity you're looking for. Because, I mean, looking at the markets as we've had them, even when you get gaps down, they don't hold. And when you gap up, you might fill the gap, but you don't go much lower than that gap. So, you have to be really careful in these seasons of choppiness, not to just be like throwing back your gains, trying to play long, but hedge to the downside. And, you need to learn how to create less expensive ways of hedging your portfolios. That's why we always argue for or, try to talk to people about doing long and short positions simultaneously, because you can actually take in a lot of income doing that while you're kind of waiting for price to prove to you that it is going to be consistently bullish or consistently bearish. So last week, we had overall bullish activity. We were, so that was, for us, that was good. All of our systematic trades just banged out returns for us, strong returns this week. So that was great. We had members who like doubled their accounts last week. So, it goes to show that learning some of these strategies can really help you kind of just consistently compound those profits and compound your returns. But coming into this week, we do have a lot more kind of everyday data points. We have CPI, we have PPI, and of course that inflation data point is something that the Fed has been talking to us a lot about. Just, how did tariffs impact inflation? How do they impact long-term inflation? And currently the expectation is that inflation should tick up a little bit. So we had a 2.7, we're looking for a 2.8. We'll see if that comes to fruition. Now, honestly, when you have these expectations that something is going to increase, even if it stays the same, and that same is still at a higher rate than where it should be, it does allow for some positive activity, because people then kind of feel a sense of, at least we're not kind of accelerating in the wrong direction. Inflation is still kind of higher than what the Fed's target is, which is one of the reasons why they're being a little bit cautious, because they don't want to end up on the wrong side of maybe elongated results of the tariff conversation that may impact inflation and cause it to tick closer up to that 3% mark, which would be well above their 2% target. So, we had the FOMC, we heard what Jay Powell had to say, and basically he kind of gave all the same kind of talking points, that inflation hasn't kind of run away from us, but we still have this kind of question mark, and the labor market continues to be really strong. And even with the change in the job market report, I think, from the Bureau of Labor Statistics, one of the things that I think oftentimes with these revisions, they can be very shocking. So a lot of people were really put off sides by the fact that the results were so negative. But a big part of that is because like just the job landscape is changing so much, even for employers. And one of the big things is that usually you had a little bit more equilibrium in the number of people that were moving into retirement or maybe being asked to leave the company, and then new hires coming into the company. And the reality is that those, people are staying on longer in their jobs if they can. And not as many people are being asked to leave because people don't want to have to retrain anyone. So the reality is that the number of new jobs isn't expanding as rapidly as it would have, but it doesn't necessarily mean that the labor market is collapsing, because you just don't have the same number of people that are like running to retirement, or, okay, today was my whatever birthday, so I need to retire tomorrow. You have more people that are being flexible with their jobs. Maybe they leave a full-time career, but then go into other kind of like consulting work or part-time gigs. So, all that data makes it hard for the statistics to come out exactly as they should. And legally, companies have a leeway of when they can report what's happening with their job situation. And that 3-month kind of flexibility is what causes these changes in the labor statistics. And so though the labor statistics have been revised very heavily, those revisions aren't because people are doing their job. It's because people are taking longer to respond to the survey data. So in previous years, usually you'd have about 80% of people responding within the first month, and then that response was kind of even keel with the rest of the 20% that would kind of flow in over the next 2 or 3 months. But in current data, that's actually not what's happening. You actually end up having a lower number of people responding. So the results are at like 60%, and that 60% really is not representative of the other 40%. And the way the LBS compiles the data, they give kind of a standard deviation of what the rest of the potential information could look like. And that's obviously not stayed in its kind of statistical kind of average, and that change hasn't been because 1,000 economists aren't doing their job, but just because the way that the data is being compiled maybe isn't as relevant, and they need to be able to update those statistics or change the way that they compile the data. But they do need to do it slowly because it still has to be representative, and they still have to have like a historical record of how the thing is working. So people were really frustrated. People were really shocked. You obviously saw that in the job market. You obviously saw that in Trump's response by firing the head of the Bureau of Labor Statistics. But I think that a lot of employees of the LBS came out, even people who were appointed by Trump or people who are strong Trump or vocal Trump supporters, and came out and said that actually this is just how the data is compiled. And yes, it is taking more time, so you do have to wait more months to be able to get the accurate data, but the data is still being compiled in a consistent manner. Now, the problem is that Trump's reaction was really strong, and the thing is that actually the LBS data was actually echoing the sentiment which Trump had been saying all along, that the labor market may not be as strong as the Fed is talking about, and we need to get rates down. Now, his main thing is that he needs to get rates down as fast as possible because he has just increased spending massively, and they cannot find a way to roll out this debt by any means, and they need to, because the Fed can only roll out 6-month and 12-month and 2-year T-bills for only a certain amount of time before this starts to become a mounting disaster. Now, the reality is that with all the information that has been coming out, it had already been baked in that we would have 2 rate cuts this year. And that will likely be in September. And after this whole labor statistics situation, that's seems to be quite certain. And then the question now is, do they do 25 and 25, or do they do 50 and 25, or 25 and 50? So, the market is already expecting rate cuts to come in. You can see that from the fact that the S&P continues to be quite bullish, in spite of the fact that some of the other aspects of the economy are kind of sending some red flags of weakness, but not red flags of like disaster. The economy is not falling apart. We are not like running into a recession. We might have a bit of stagflation, but that's probably like the worst of the potential worst for us, like in the near future, unless something massively changes. But no one seems to care that much anymore about tariffs. They're not as freaked out about the situation. The situation in Russia, Ukraine is continuing to deteriorate very quickly and constantly, and yet the market doesn't care at all anymore about that. So, I think that we just have to accept the market for what it is, and we have to play the market that we have in front of us, not the one that we want or the one that we want to bias ourselves towards. And I think that's why a lot of people aren't necessarily making a lot of money right now, because they're just not preparing themselves for the fact that, the market can remain irrational longer than you can remain solvent if you are trying to stand in front of a freight train. Like, you just have to accept what it is. No, I'm not on holiday. I've moved to the Balkans. So this is actually, this right here isn't our new home. Our house is still in preparations, but this is our new home. We have moved to Montenegro. So we're not on holiday. This is where we live. This is where we are now. And my kids are now learning Serbian. So, we're committed for the long haul to this Balkans relocation. So yeah, the markets have for those who were, looking and watching and paying attention to the signs, there was a lot of money to be had. And hopefully you've done well. Hopefully you have made solid money playing some really great setups. We talked about, the nuclear stocks, that they were running hot, but they could have some pullbacks. But as you saw this whole week, they continued to run hot until Friday. Some of the nuclear stocks did have a nice pullback, but like Oklo continued to push towards its highs. And then you continue to see that in other areas of the market where you just continue to have bullish signs. The two areas where you've just had crazy weakness has been software and cybersecurity. And I'll be honest, I've asked a lot of people, like, what is going on, and why are we seeing such weakness in that particular sector? And I'll be honest, like, their answers weren't exceedingly convincing. It wasn't like anything that I would be like, oh, okay, that makes a lot of sense. They were just kind of general reasons. But I think that those areas, if you are paying attention to how the options positioning is setting up, that eventually those are going to set themselves up for nice moves. You cannot have an entire sector like software and cybersecurity make a really significant leg down without seeing the strongest players kind of pull ahead. So, it's like from everything from CrowdStrike and Salesforce and Fortnite and, so on and so forth. Zscaler, they've all just taken a massive hit. You've had a bit of a pullback on like Snow, a bit of a pullback on ARM, but those haven't been like devastating pullbacks like you've seen on some of the others. And then, of course, you had Marvell, which already had its massive fall and is now slowly climbing back up. But, in relationship to the others, it's still very far behind its overall trajectory where it had been during 2024 and then coming into 2025. So I do think that area, though it may not be set up today, it is something that you want to start considering how you might want to play those positions. A lot of them are quite expensive, so it's difficult for me to say, oh, just sell short puts at, key kind of supply at key demand areas. So, that's not going to be a strategy that necessarily works. Do I think you can buy long puts? I don't know how much more downside these stocks can have, because they really have taken quite significant hits over the last couple of weeks and the last couple of months. So I think that area has just displayed some massive weakness, especially during a time where the market should be exceedingly strong. So, July is like gangster month. They should have been like just had random kind of bullish moves just because it's July, and they didn't. And the fact that like mega caps were moving and they weren't even getting any kind of like rollover for those bullish moves was quite telling. But I don't think that it means that those stocks are not going to perform, because there is no such thing as AI and computing and all this without cybersecurity and software. So unless like nobody's using Snow and Marvell because something else has like come out and kind of taken over, or CrowdStrike, or Salesforce, or any of these kind of customer relationship tools, I mean, I don't think anybody's like suddenly popped into the market and is like dominating the scene. So I think that it's something that, you can really prepare yourself for. But I do think that you want to start seeing some overall like positive flows coming into those sectors. And the entire sector should start to get the a rising tide lifts all boats kind of feeling, that they're all doing a little bit better because they were all just doing so poorly. And then you'll start to see the leaders pull ahead. Now, which are the leaders? That is still yet to be seen. I have been like obsessively checking the gamma on all of those underlyings. And it's kind of funny because a couple stocks had their earnings week, like this last week and the week before. And normally I would have seen really clean gamma pins, and we would have been playing those stocks. And I just told the group, I was like, actually their gamma is really weak. So that doesn't say a lot for like their potential to make another leg up. And they didn't make legs up, they all made legs down. So thankfully we kind of saw that in the data, and we avoided just hopium riding a bunch of losses, because we didn't do that. We had closed all of our positions while things were still at their highs, and so we took our profits, and then we're just waiting to see where the next setup was. Now, looking forward, I don't see new gamma, so I can't kind of give you like levels or something like that. It would just be pure, what is the chart telling me? And right now, a lot of these stocks aren't at key demand areas yet. So that could very well mean that they have a little bit more downside to them till they get to really key support areas before they make a really like their next kind of leg up. But I suspect because the entire sector has shown weakness, that they may not give you like a random V-shaped recovery. I think that you could end up getting a bit more of like a base or double bottoms, or some kind of cup and handle formation, where you kind of see institutional buyers slowly start to kind of pull in before making their next leg up. One of the things I did talk about last week was semiconductors. I mean, those are really, really, really at like super highs. I can't justify buying anything here. So I'm not. I've taken profits on almost all my options positions. I just have like a few kind of hangers on, just because I have like leaps on things like NVIDIA and AVGO, but those are literally at like 60 delta, and I'm just consistently selling a lot against those positions to avoid losing any kind of profits that I've already kind of are unrealized profits on those positions. But most of my positions I've closed. So what I have been doing instead is selling puts on SOXL. I do think that obviously if the stocks are going to kind of roll over, then SOXL will take the biggest hit since it is a 3-time leveraged ETF. And then I can kind of rescale in there with my shares. So I've taken profits on all my shares at the top. And I told everyone in the Discord that this was looking really hot and high. And we had already been in since the $8 and $9 and $11 mark. And we were up like 300% on shares. So felt a little bit like unjustified that we were trying to squeeze the last drop out of the rag. It felt like it would be much better to sell short puts down at key demand areas and then scale back in at some really much better entry prices than sticking around at like the 30. And now I think SOXL is around 27 or 25. So that's something you can also kind of work out the logic to on your own. Of course, we have NVIDIA earnings coming out. That normally has a lot of gamma. I do have gamma for NVIDIA up at like the one, just above us, but it's not high enough above that I can justify like trying to squeeze out like some pennies. So I have to stay true to my methodology, and that is requiring there to be some kind of gamma squeezes or gamma setups that are justifying why I can remain in a trend. Obviously the trend is your friend. So, we are on an upswing. I can't lie about that. We have sustained a really beautiful trend line on a lot of the semiconductors. But, eventually things do take a pullback because that's just what price action requires. And so I'd rather get back in on, when we see those dips. I think the ongoing weirdness between the United States and China always leaves a funny question mark when it comes to semiconductors. Probably the stock that has surprisingly had a nice little turnaround here is Micron. MU has had a nice move, laggard the others because AMD had a super nice move, and I completely missed that in spite of everything that Dre and Ashanze were saying about AMD and their hardcore belief in AMD. I felt like, okay, I've tried this stock too many times before and it doesn't do anything for me. So I'm not going to pretend that I can read the tea leaves. So I missed the move, but I'm okay with that because obviously I have been, doing. There's fireworks, but I don't think you can see them. I'm like, I feel like I hear fireworks. I can just see them in the reflection on the window. But anyhow, so I think that, with semiconductors, it always has like a funny flavor about what can happen with China. That's always a very large political conversation that is going on. Not just with the whole BRICS countries, with everything relating to rare earth metals and rare earth minerals, and China's kind of influence in Africa, their connection with Russia. So there's a massive kind of political game that's being played, and semiconductors always seems to somehow like get jammed into the middle of that. So, there's always that kind of question mark that's happening in the background. But obviously, semiconductors have done phenomenally well. It's just the question, do you buy here at the highs? And I'm not ready to do that. We'll see what happens after NVIDIA earnings. We'll see what happens on the extended tariff news. And we'll see if we get some kind of decent pullback. But how I'm playing it here is doing a lot of short puts on SOXL. It's a very easy way to scale back in at a good price and be able to get the 3-time triple leverage while I'm waiting for more key pullbacks in that area. This coming week, as I said, we have CPI and PPI. So that's going to give us information that may be informative about what's going to be happening with the Fed funds rates, if that's going to push the Fed to consider a 50 points basis hike in September. Rate cut, if they're going to consider a 50-point rate cut in September. Obviously, we have Jackson Hole later this month, so that could be a very big volatility event. That's usually where Powell comes out and says something really impactful, and it usually impacts the markets. So we do want to be aware of that, but that's not coming out in this coming week. Then, of course, we have like retail sales at the end of the week, which people are really interested in. You've had things like Walmart have really nice breakout moves. The question is, are those moves going to be sustainable, or are we going to see like changes in retail behavior and how companies are able to absorb the increased prices because of the change in tariffs and shifts in supply chain because of tariffs. So all of that is, I think, I always tell people, news events do not give you your levels. It just gives you your acceleration to those levels. So if you're good at charting, you should already have some key levels and targets kind of already up on your chart. Now, I think what will be very telling is how futures open up after this live, sadly. If futures open up positive, then I think that it's a positive gauge that the wider kind of global markets aren't too threatened by the economic news coming out during this week. And but if futures come out really red, then I think that should give us a little bit of some kind of warning sign that there can be a little bit more follow through on the bearish feeling into OPEX. So this week we do have VIX expiration and we have options expiration. VIX expiration will happen before options expiration. So normally VIX expiration kind of gives you a shift in whatever the trend is. So if we open up bearish, VIX expiration could give us a pop into the true continued trajectory, which would be down. But if we open up in futures, the VIX expiration could give us a bit of a pullback, and then we should see then a follow through with the squeeze to the upside. Overall, gamma is very, very, very thin. It's really the thinnest I've probably ever seen since I've been interested in following and looking at gamma. We still have a lot of gamma above us, so those positions aren't closing, so people aren't totally concerned about like a fall apart, but a lot of those positions that are in place could be hedges for other positions. So we can't just say that those are like long calls that are all sitting out down the chain. Those could be institutional hedges that are, uncorrelated to positions that institutions are already in, whether that be in shares, whether that be in these kind of new ultra yield ETFs, however the managed accounts are set up. So the odd thing is that normally you would have gamma kind of like laid out up and down the chain, and you don't. You just basically have them at the key psychological levels, the 6,400, 6,450, 6,500, and then 6,350, 6,300, and then down the chain. So, it means, first of all, that you're likely to get a lot of chopping action, that you're likely to get kind of squeezes to key kind of psychological levels, and then you can get a lot of digestion. So for people who like to scalp and they need these like fluid moves, you may not get a lot of those, because if you kind of just get a gap up and a gap up into, or a gap down into a key psychological level, then you could just end up getting a lot of consolidation during the US trading hours, and then get more of your kind of directional activity in the overnight and pre-market. So you do want to be cautious of that, because we don't have those kind of buildup of positioning that's showing, oh yeah, people are directionally bullish or directionally bearish. People are directionally fluid at this time. So you also want to be cautious of that. I'm not sure if you guys have any questions about upcoming events or about particular stocks or sectors, but feel free to ask, because yeah, I've kind of covered what was at like in the forefront of my mind. I mean, I can always keep talking, but sometimes more noise isn't helpful. But yeah, feel free to ask about any stocks that you may be looking at. For those, actually, something I thought was, somebody texted me and they were like, oh, thank you so much for, so I guess call out, I mean, not I guess. So at the end of the year when Trump came into, was elected president, one of the areas that I thought would do really well are the perma basins and the royalty trusts on different oil fields. And those have done exceedingly well, besides the fact that they pay very, very good dividends. So for those that want to look back at those, you absolutely can, because those just pay such good dividends. Even if the stock doesn't move a lot, you still end up getting paid quite handsomely with their dividend payouts, especially because they very often do special dividend payouts that are not correlated to like their regular payouts, and those are usually quite good. What do you think about UNH and Lilly? So a lot of people have asked me about that. Overall, I think that the entire sector is very concerned about where policy is going. I think the big beautiful bill brought in a lot of policy relating to Medicare, Medicaid, medical reimbursements, and how payouts were going to proceed. I think, and it also impacted a lot relating to veterans benefits. And I think those are just massive areas of where income for a lot of the medical sector comes from. We have to just, accept that there's between pensions and government reimbursements are a massive part of how the medical system works. So I think that those sectors have a lot of just the whole healthcare sector has kind of a lot pushing against it. And I've kind of stuck to that for a while, thankfully, just because, obviously the healthcare stocks have done quite poorly. And I remember last week and the week before, I did say that I was quite cautious about the whole situation and that I wasn't really leaning in, just because I think that those policy issues are very difficult to give guidance against, and then also to deploy capital towards. So where you're going to want to put capital funding inside of an organization, a huge organization like UNH, when you're not sure where reimbursements are going to be coming from, is a very difficult conversation. Now, you also have all the legal issues that relating to the murder of the CEO and other ongoing issues, legal issues relating to UNH. So I think that it's not something where I'm going to be putting my capital. I just think that there are other areas that are more likely to have more stability. Now, do I think UNH is never going to come back? No, I'm not saying that. Nor with Eli Lilly. I think that all of those companies will eventually do well. I think they just have to do well in a very specific kind of political environment and policy environment. And I think right now those policy questions are much more, give a lot more hesitation to institutional investors than retail investors are giving those institutional investors credit for. So I'm cautious on everything relating to healthcare. I think the area that was doing the best and was getting the most consistent returns for a very long time was medical devices. And we were in a lot of those companies. Those paid us really well. Even a lot of those are just consolidating right now, so they're not offering a lot of returns at this particular moment either. And then biotech is kind of an area that's getting a bit more positive energy, but that's an area where you really have to know exactly what's going on with each company, because you can get really nice moves and then literally give it all back the very next day. So biotech has a lot of volatility compared to some other more stable areas of the market. So yeah, that's what I'm thinking. Thoughts on TSM. So I think that the whole semiconductor space right now has just had massive runs. So I think that, this is an area where I previously mentioned that, I'm kind of positioning myself more on SOXL. I think that that's maybe it's too conservative a play, just being short puts on SOXL. But I think that, all of the stocks are going to impact each other. And though like long term, I think all of the semiconductor space, not just TSM, NVIDIA, Micron, AMD, all of those stocks are going to continue to increase in value. That's not a question if you're asking about like the next 3 years. But if I'm looking over the next couple of weeks, the next month for a short-term play, I'm waiting for all of them to kind of come back into more buyable prices, so to say, for a new long-term kind of position. So, but again, you always have the political dynamics with China, which make TSM a little bit more sensitive. No matter what Trump says today, Trump is very good at changing his mind. So, yeah, I don't think it boosts a lot of confidence to say that to have a bias on something like TSM is you're like kind of waiting to for Trump to kind of make you feel bad about your bias, because whatever you think, he's always going to do something else and then cause the conversation to change. What are you buying now for long term? So that's a really, what am I buying right now for long term? So this kind of moved down in software and cybersecurity. They have moved down to good prices, but I do think that there's a potential for them to move down further. So those are definitely stocks that I am watching very carefully at. I think that something like things like CRM, CrowdStrike, FT&T, Zscaler, those Marvell, Snow, ARM, those have all kind of come down, but they've not come down to those really key areas. I think that there are some demand zones that are just a little bit further down where we could see like another leg down before we start to carve out a base. So those are definitely companies that are worth having dry powder for. Lots of consolidation in Tesla, big news, maybe coming for a breakout. So in our Discord, we did talk about Tesla. So we have a lot of gamma at the 350, but if we get above the 350, we could easily get to 500. And the reason is because a lot of institutional positioning is up really high, but a gamma squeeze can't squeeze up to that 500 from this positioning. There's just too little delta on those positions, and they still have a lot of time on them. But if we were to move the current price of Tesla so that at the money strike towards that 350 or even above the 350, then we shift all of the deltas, right? And then that 400 and 500 delta becomes much more impactful. Then we could ignite some kind of gamma squeeze. So, yeah, I can't say that I'm long-term bullish yet on Tesla, but I do think that if they can kind of get that volatility push to get them above that 350, then you're really looking for that kind of swing to the pins. So we have had Derek join us. Happy birthday, Derek. I hope you have had a wonderful birthday. And I would say you can join me up on the stage, but I don't know what you're doing. So I know that you might be celebrating your birthday. What are your thoughts on Coinbase, Mara, IBIT, etc.? Looks like they're having a slight pullback. So I am really surprised about Coinbase. That's the one I will say that I'm very surprised about. That had significant positive gamma right along with Hood. So Coin and Hood had this like really clean positive squeezes all the way up. But Coin, I don't know what happened. That just seriously just dumped. So I was really surprised about that. MSTR is trying to break its downward trend line. It's like peaked above that downward trend line. Let's see if it can continue to have that positive energy. But I'll be honest, the gamma on MSTR, usually it's really clean, and it's not right now. But a lot of the miners, they've not had their kind of day in the sun. And I think the reality is that, well, for one, I think, so right now for a long time, Ethereum was kind of the laggard in the mix. And so I think that there was so much potential in Ethereum, and of course it being so much less expensive than Bitcoin, that a lot of people that are into the crypto space were really eyeing themselves for this kind of this like later laggard move on Ethereum. And I think it's similar to what is happening with silver and gold, where silver was just lagging forever, but then once silver kind of gets its move, then it just kind of makes a massive move to kind of meet the move that gold was doing. And it historically does that, right? Somehow I feel like there's a similar kind of rhetoric or storyline that goes with Bitcoin and Ethereum, where Bitcoin has had, it's been the main stage, it's been the bigger conversation, but affordability wise and just the use case, I think that a lot of people were kind of waiting for this kind of current move that has happened on Ethereum. So I think that it was just kind of, I think that, people are starting to become a lot more varied in their response to what's going on in the crypto space. So they don't feel like they need to marry those top 3 or 4 big names, that they can actually diversify and get much bigger moves in some of the stable coins and things like Ethereum that haven't already had massive moves. Let's see if the birthday boy is going. Sasha, altcoin season is here to stay. Let's see. This, what do you call it? Instagram always likes to be funny when you try to add people. Happy birthday to you.
Hey,
Happy
what's up?
birthday to you. So how old are you? You look like you're about 30.
44.
Are we really the same age?
I guess so.
I feel like we've had this conversation,
I
and then
think so.
it's gonna be
That's
my
funny.
birthday in a couple of weeks, so we will
That's
both be
funny.
44
Actually, yeah,
together.
I think we have had this. Yeah, 444, Angel's number. That's
Well,
pretty dope.
happy birthday.
Yeah. Let me see. Let me fix this lighting.
No,
I
no,
don't know.
you're good.
There you go. All
So
right.
So you have been killing it in your options
Yeah.
group.
Thank you.
Congratulations to your stock club. And for those that don't know, Derek has his own Patreon and he puts
Yeah.
out a lot of in-depth
A, lo-
information
a lot.
on positions, like companies that he thinks are setting up for great
Hmm.
moves. And and so,
Yeah.
really playing those long-term
Uh-huh.
swing trades. So, I'm more of a day
Yeah.
trader
Yeah.
plus swing trader,
Hmm.
but Derek is
Yeah.
great at just letting those positions
Hmm.
bake. So, what are you
Yeah.
looking at, sir?
I'm looking at a lot, but I'll tell you this. Get your pens and papers out for people. That's one thing about me. I'm always dropping gems right away. Oh, yeah. Get your pen, get your paper out. I'm looking right now at the healthcare sector. Okay.
Okay.
Okay. It's a lot of companies out there right now. You know, it's a lot of companies out there right now. Healthcare has been down for a while. Okay. So you have companies like Eli Lilly, you have companies like damn, what am I I'm trying to think. I'm having a brain freeze here.
NVO,
Yeah, yeah,
Hims,
UNH. UNH.
UNH.
Okay. United Health is down big, massively, and I'm sure you've already seen that, Suze. I'm actually looking for them to have a better year next year. And the reason I say that because they're going through a situation right now where they have the Department of Justice down their neck. And a lot of people aren't looking at it like this. The way I'm looking at it, the Department of Justice is down their neck, but Trump can be paid off. We all know that. I'm just being honest. They have lobbyists that work in Washington. So this Department of Justice fiasco is going to wear off. So
Mhm.
right now, I haven't looked lately. I could, somebody else could look at it, but I want to say, where's it at? UNH is probably around like 230, 240, like somewhere in that range or something like that. uh, so it right now, the all time, well, not the all time high, but the 52-week range for it, I want to say was up 600 or somewhere around that range. So yeah, that's a massive one. So if you're looking at a 1 year to 2 year, especially if you options trade, that's a good play. Okay, somebody said 245. Okay,
Mhm. Yeah,
definitely.
it's
And
crazy down.
even if you swing trade or day trade, it's been moving. And the reason being is that they're getting this behind them. Once the Department of Justice does their deal with them, I do look for United Healthcare to go up. Now, another reason too, a lot of people don't look at them. They just look at them as healthcare. It's also a data company too. They take our data when you go to the hospital and they sell it too. So that's a big company. At one point, they were on track to become a $1 trillion company. I think they
Hmm.
would have been the first in healthcare, but I'm not sure where they're at right now. It might be 400 billion or somewhere around there, but they were on track. They were very close. And I think it was wasn't it Berkshire Hathaway was the first company, real estate to hit 1 trillion. I think they might have, or they got close to it. But for healthcare, it would have been United Health
Yeah.
Group.
Yeah. So as I was saying earlier that, until I think like as you said, like policy will
Hmm.
change. These
Yeah,
you can't have an entire sector that's dead. I just
yeah.
think that you will get there will be signs in the wind. Um, like whether it's on Truth Social or it's whatever it may be that indicate that that the tide is turning. Now,
Mm.
when the tides turn and policy changes,
you can literally go from 250. I mean, I think they could go a little bit lower or just digest here. I
Yeah,
don't know that UNH can get much lower than 250,
yeah, I'm
just
looking at
because
it right
of
now. Wow, I didn't even know it was 250. Actually, because
yeah,
it was like it was like very low recently. At one point, I
yeah,
remember seeing like
because
230
because
or somewhere around that range, 237, I think.
and a lot of people were asking me when it was like down at 300, and I was like, it could get a bit of a mean reversion,
Hmm.
but
Yeah.
I think that we need to have some kind of whispers where
Hmm.
it's like buy the rumor, sell the news. We need to have some
Yep.
rumors that policy is changing. But yeah, I mean, healthcare is just too big to
Yeah.
disappear. And the
Right.
fact
Yeah.
that the
It's
drop
not
is
going anywhere.
so straight, you can get, after you get a base, I think that you end up in like a perfect kind of
Yeah.
stage three analysis or whatever the Weinstein people call it, but you can get a really like a long-term breakout move. But
Yeah.
I'm just not ready to enter right now.
Yeah, and it's funny. I'm looking at it year to date. It's down 50%, like right on the money, 50.40%.
Mhm.
Even if somebody wasn't looking to enter right now, if you look at what, like around like, let me see, April, March, May. If you look around May 14th, it had a high number of volume. It was like 40 million people with the volume right there. And that was because it was a
Mhm.
drastic drop, and that was like after the tariffs and then the Department of Justice. So if it was me, it doesn't hurt, if you're going to get into some long-term positions. And this is what I always teach my students. You don't know where the bottom is. Nobody knows where the bottom is. We always think we know where the bottom is.
Mhm.
Doesn't hurt it doesn't hurt to enter a position long term, okay, 1 year, 2 years out, and kind of like you find your foundation, and then
Mhm.
kind of if you have to average down. And I've been pretty successful with that, and a lot of my students have. With
Mhm.
okay, nobody knows what the bottom is. It's a high probability trade, but if you're doing just uh, short-term trades and swings, yeah, it might not be a time to enter. So
Mhm.
it depends on your time horizon,
Yeah.
like Sue said. But
Yep. That I can completely agree with. Do
yeah,
I think that 2 years from now UNH is going to be $250? Definitely not. Like 2 years from
no,
now, you need to at
not
least be
even.
back at the 400, or otherwise you have
Yeah,
like a
yeah,
collapsing medical
yeah,
sector. So that's, so I completely agree with you. Like long term, there is a view to kind of get in, but for the short term trade, now to be honest, like looking at the monthly chart, I mean, I
hmm
was not expecting I mean UNH to. There's like a really long
hmm
wick, but all the way back, I don't even see the date. It's so far back. Um, yeah, it's like maybe like 4 years ago, it had this like really left a really long monthly wick. And I wasn't expecting that it would come back into the wick. Now that it's come
hmm
back so close, I I'm almost like, do we actually come into the 50% of that monthly wick or clean that up before carving out a base and then going back up? So that would, that's what kind of I would be looking at or looking forward to kind of maybe start layering in.
yeah.
Um,
And it's weird with them because a lot of people look at them as just like I said, healthcare. But what a lot of people don't realize is that UNH is also too in charge of so much more than that. What is a company? I'm trying to think of the prescription company. Hey, dang, my phone's not on me right now. But or actually, hold on. You know what? Let me see. Oh, yeah, there it goes. Optima. Okay, a lot of people don't know Optima RX UNH owns too. I don't know if you
okay.
know that, but yeah,
Mm-mm.
yeah, they own
Okay.
Optima. Okay, RX, so they have the prescription drug industry on lock. Okay,
Okay.
So not only that, that's also data too, because they know what
Hmm.
prescription drugs you're taking. They know when you're taking it. So that's something else they could sell. So if you look at the top 10 companies going by revenue, not market capital, because if you look at market capital, you'll realize that what Nvidia is the top company with what over 4.3 trillion. But if you look at just revenue,
Hmm.
Walmart, and this is something I had to look at recently. Walmart's, I want to say Walmart's number one, or either it's yeah, it's Walmart, and then UNH is in there. UNH is in there. So they brought in 400 billion. So you got to stop looking at just market capital. That market
Hmm.
capital is just value. But as
Hmm.
far as in terms of bringing in money every month, UNH is it's in the top 10.
Okay. That I did not
Yeah.
know that.
See. Yeah, yeah, look it up. Look it up because it kind of like stunned me. I was listening to the radio and somebody, Bloomberg, I listen to it every day, and somebody said UNH is top 10 for revenue, bringing in money. And I said, whoa. I said, that don't even sound right. So I looked it up. Yep.
Hmm.
Yep, they are.
There you go. So for those
But,
those
but,
who ask,
yep.
if you're in this, if you're thinking to get in a long-term investment position, then there's some good reasons to consider um, consider starting your averaging in. So there you go.
Yeah. So healthcare is another sector I'm looking at. Right now, I feel like energy's ran its course. I'm not gonna lie with Constellation Energy Group. As you know, I'm big on that one. Susan knows. They
Hmm.
Constellation's been ripping and running. I kind of feel like and I feel bad about this because I've like stopped people from making gains. I won't lie. I've told like some of my stock club members and options club members have been like, "Hey, when should I get in?" I'm like, "It is running hot. I can't see it going this long. It's went this long. It's been like 2 years on the run, and it's because of all this
Hmm.
AI. But it's been so much going on, with that whole industry that." It's not even taking a time to just consolidate or settle
Hmm.
down. It's just ripping and running. Like over the
Yep.
last 2 3 years, Constellation Energy Group is right up there with Palantir. I want to
Yeah.
say they're like in the top like three. Palantir has been number one with like over 500%, and I've been able to get two, yeah, two out of three, two out of three of the top 10 with Palantir and Constellation. Go ahead,
Yeah.
Sis.
The VST, NRG, and
VST.
CEG last year, those three just
Yeah.
were gangbusters. And I have
Yeah.
to be really honest. I don't, I mean, I think I was just like watching something on
Hmm.
oh, what is it? Because, both my dad and my stepdad are in the oil industry. And so they're
Yeah.
always
Yeah.
sending
We
me
talked
these
about that.
like
Yeah.
presentations on weird like mining and
Uh-huh.
minerals and blah, blah, blah. Like, oh, you'll
Yeah.
find this
MP.
interesting. And I'm like, and
MP.
sometimes I'm like, oh, it's so boring, but I have to
Yeah, I
watch
know.
it
I
because
get it.
I love
I get
my
it.
dad's. But at some point, maybe like 2 years ago, they sent me something. And for whatever reason, I was like totally convinced about VST and CEG. And I
Hmm.
put it in my
Yeah.
Discord, just
Yeah.
buy. Just this thing is going. Just buy.
Yeah.
And energy
Hmm.
is required. And it would to be like those three did so
Yeah.
well all the way through 2024 and even into 2025. Now, NRG has just been basing. It's not done much for the last month and a half. It's like flat
Yeah.
around this 150, but VST
Dang,
and CEG,
I'm looking at CEG over the last 5 years, 783.59%.
it's
Crazy. I didn't
crazy.
even know that. I knew it. I knew over the last 5 years it's been on a run. At one point, let me see, 2022, it, February 2022 it was $38. So, and now it's up to 335. And I'm gonna tell you guys something else. They just signed a deal with Calpine. It's not, they acknowledged it publicly, but it's not finalized. I think they're going to have to sell off a couple companies. So
Mhm.
Calpine is the number one gas company in the US. So once that goes through, they're gonna have not only the top nuclear fleet, they'll have the gas industry too. So write this down, XLU. So XLU, which is the ETF, that's one I like a lot.
The
So
utility ETF. So
yeah, yeah, XLU. Yeah, they're up. Let me see. The
mhm,
last 5 years, 40%. That's not bad.
it's not
So
bad. And
not bad at all.
it's an even,
Hmm.
what's the word? It's a very nice flow. So you buy and you're not
Yeah.
looking at like
Hmm.
20% drawdowns every other day. So I
Yeah,
like that.
yeah, yeah,
That's a nice, a good
yeah.
idea. One of the other, I don't know, I was thinking about you the other day because I was doing more
Hmm.
research on APLD, because,
Hmm.
and then,
Let's see.
they're kind of like the key coolant
Oh
company
yeah, yeah. I'm familiar with them.
for the data centers for
Yep,
NVIDIA.
yep, yep. I'm
And
very familiar with them. Vertex. That's I'm gonna be honest. I'm kind of
and
biotech
VRT.
or bias VRT. Okay, you guys can
Yep.
look
So
that up. I do like VRT a little better, but APMD or whatever you just
APLD.
said for
But
APLD.
yeah, so those two companies, this last week, or maybe it's now been a couple of weeks, their earnings, VRT's earnings were great.
Hmm.
I was bullish on
Yeah.
their earnings. I posted that
Let me see.
in the Discord
Sneeze.
that
Over 1 year, 96%.
yeah.
Go ahead. Keep going.
But I think that VRT and APLD have not seen their, I mean, I think they're still in their heyday. They have a
I just
lot
seen
going for them.
I just seen some. I didn't know over the last 5 years, Furtive is I'm 148%. That's crazy, and they didn't really take off until 2023, June 2023. Yeah, you
Mhm.
guys got to remember, you need data, you need cooling for data centers.
Yep.
uh Nvidia had an issue too, and I can't remember what the chip was called, but they were having trouble. Remember when they were having trouble with some of the chips having a issue with overcooling? That's now fixed, and Vertiv is the company that's
Mhm.
providing the cooling systems for it. So think of it this way: you need data centers, right? You're gonna need something to cool the chips off, because as large language models like OpenAI, ChatGPT, Grok, Gemini, and all the others, uh, Anthropic, you're gonna need cooling of the system. So you got to have the top companies, and Vertiv is
Mhm.
one of the best. So
Yep.
definitely right for you not familiar, it's VRT is a ticker,
Mhm.
and the 52-week range is $53 to 155. And I even like the EPS on it. It's 208, and
Mhm.
market cap's only 53 billion, so they have room to go.
Yep.
And the average
Um,
volume on it is pretty high. It's like 777 million flat. But
mhm. So somebody asked, didn't Amazon ditch VRT? So I think they did, and they went with um, it's not Intel, it's like HP's cooling system instead. It was like something like that. So some of the other computing companies have their own like
yeah,
sub
you're getting better
not
deals.
subdivision, what do you call it? They have like a
Yeah,
division inside their company that does cooling. And so a lot of people when you look at the competitors, but um, none of those companies are scalable enough. VRT,
yeah,
because this is what they're doing, they're kind of best in class. There was another company, like a French sounding company, like Chemois or Chermois, something weird like that. The ticker symbol is CC, and that was supposed to be have like some massive inroads with NVIDIA. And people were constantly referring that it was going to be the it thing. And VRT was always like, I think VRT is kind of it. It's kind of has
I kind of feel like
replaced
they're the
NVIDIA.
Nvidia. I feel like they're the Nvidia of cooling companies.
Yeah.
It's all and their CEO was just on Bloomberg, and he was saying that not only people only chips, they're also doing other stuff outside of that. It's not just machine learning, it's blockchain, it's also, what do you say, HVAC. So it's not like it's just AI. Okay.
hmm
And I'm reading the profile. It says artificial intelligence in industries. It's machine learning, designing, construction, and managing of data centers. The company was formerly known as Applied Blockchain. Okay. So it's bigger than just AI. So you
hmm
can't think of it just as
That's a
that. So
good
yeah,
point.
Amazon may have ditched VRT, but also too keep in mind that Amazon also ditched a lot of companies before, and the reason being is that Amazon has weight, so they'll try to get somebody that's a competitor. Okay, nobody wants to do business with the best of the best because it's going to cost more.
hmm
It's almost like nobody wanting this with Nvidia, and want to make their own chips. Yeah, you don't want to do business with them, but they are the best of best.
Yeah, that's
So
actually a good way of putting it. So yeah, I agree. I really
yeah.
like VRT. I really like
Hmm.
APLD. And there was another company that was in this space. Oh, the company that I was really that last week I was super bullish on their earnings was ANet. But I have to say they
Hmm.
totally blew me out of the water because I was positioned for them to hit 130, maybe 135, but their move to 140 really, really,
Yeah.
really surprised me.
Sometimes it
So,
happens like that, right?
and they
Yeah.
held,
Like
um, which was even more amazing. So,
I'm seeing a lot of things do weird stuff like that. Even Palantir. Like honestly, I'm just gonna be honest. I've had Palantir since $2, maybe three. The way Palantir is ripping and running, it's insane to me. But what I'm finding out with Donald Trump's market, anything's possible. And the reason being is that, like, they're putting a lot of money into AI about this report because I'm building this report and I know you know about it. The artificial intelligence report 4. So I got 3 series and I'm learning a lot. They're pumping a lot of money. They're deregulating the energy sector big time. Like to the
mm,
point where, and it's good and bad. I feel bad saying this, but to the point now where they want to compete with China. Okay. And the only way to compete with China is to deregulate the whole entire energy industry. Okay.
mhm.
So somebody said, can you repeat the ticker VRT and something else you said?
Yeah, APLD. I think it's Applied Digital, something digital.
Yeah, 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 yeah.
Applied-
APLD.
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 Yeah.
Yeah, Applied Digital Corporation. So
So,
they're
mhm.
so yeah, they're working. Let me see. Matter of fact, I can tell you what it is. Let me see.
I,
I'll tell you.
mhm.
Go ahead.
No, no. You were saying something about Palantir competing in the energy space with China.
Okay, it's called. Okay, write this down. Let me know when you guys are ready. At least one. So it's called the Energy Dominance Council. Okay, so Trump appointed a council, and I just was listening to it on podcast because remember they had that meeting in DC about energy. Okay, Trump was
hmm
at it. Jensen was at it. Jensen Wong, Nvidia's CEO. Who else was Scott Bassett or
hmm
Bassett? Uh, he was at it. It was some other people. I can't think of the guy's name, but it was a lot of people at it.
hmm
Uh, they are going to deregulate energy, and the reason being is that China has 9,000 terawatts. Let me see. Let me look that up and confirm it. But China has 9,000 terawatts. Yeah, yeah, 9,460 terawatts, which that's 1,000 megawatts, like nine times nine. Okay, that is 31.6% of global output. Okay, so imagine China has the
Wow.
most energy, 31% of it. You know who's number two? It's us, US, with
hmm
4,490 terawatts, and that's only 15%. So what does the U.S. need to do? They need to increase output. So Trump is going to deregulate the energy industry.
Mhm.
Okay, don't ask me how I know, but let's just put it this way. It is growing. I'm seeing things I've never seen before. They're pushing it like to the point where it's good and bad. Okay, yeah, it's going to be some communities that suffer with coal. Obviously, we know the ramifications
Mhm.
of coal, but the energy sector as a whole is going to go up because they're going to deregulate, and that's what the what do I just call it? The council, the I just had the name. My bad.
The energy, oh,
Energy Council. Let me see. Or Energy Dominance Council. Somebody write it in
dominance,
there.
that's the word,
Okay.
dominance council,
Look,
energy
look.
dominance.
I want you guys to Google that. So pretty much what this council is doing, they're gonna find ways to make it easier. They're like, so let's say you want to build a nuclear energy or a nuclear power plant, okay? Instead of it taking 10 to 20 years. Let's short it 5 years. Okay. And they're going to start building these SMRs, which are small module reactors. Okay.
Mhm.
And you're going to start seeing that more at nuclear plants. Okay. And then there are also these plants that were decommissioned, they're bringing them back.
Yes.
Palisades was decommissioned. That's one of the plants out in Michigan. Okay, I've been there before. That one's coming back. 3 Mile Island, which is a big one because, back in the 1979, they had the partial nuclear meltdown. So that one's
Mhm.
big, but it was 3 units. One of them is done. That's the one that had the partial meltdown, but they have two other units. They're bringing those back on because they've been down for 5 years. And the reason
Mhm.
being is I want this Microsoft is looking to buy. Meta also, too, is buying
Mhm.
hydropower, too.
Mhm.
So all of these companies are dumping massive amounts of energy
Mhm.
into the energy infrastructure, and they're also too paying for transmission lines too, because
Mhm.
you have to have it separate. You have to have commercial usage,
Mhm.
for companies and stuff, and then you also have to have us as consumers, regular people.
Mhm.
So you have to have like a transmission line that can support that.
Mhm.
Otherwise, you're gonna have what do you call it, blackouts.
Yeah.
So,
So So it's funny because I was listening, oh, I don't remember who it was. I
mhm,
was listening to an interview, I think, with Doomberg, and he talked about this. This was actually one of the things that he was that he was talking about. And one of his big things was for many years, there was this ideology that like the barrel of the oil needed to be over a certain price in order for energy companies to
yeah,
make a
yeah,
profit. But
yeah.
because of the speed at which AI is being utilized, that actually it brings that kind of cost down so that even if the price of
Hmm.
oil is lower, that they're still slowly able to break a profit. And
Hmm.
that as deregulation comes in, that energy companies that weren't able to be profitable and previously
Hmm.
at a barrel that was under $100, that it is
Yeah, yeah,
still
yeah.
possible for them to potentially kind of use this occasion to kind of figure themselves out, to
Hmm.
be able to um, cause like change their economy so
Hmm.
that they are able to continue to be profitable. Now, I don't know because so in a way, I think that this last season of Biden was really good for a lot of these energy companies because it
Hmm.
forced
Yeah,
them to diversify with all
yeah,
these green credits and stuff.
yeah.
And so now that it's kind of like a waste of energy that they did all
Oh,
of that and now everything's
yeah,
going to get
yeah. I,
deregulated.
I agree with
But
that
it
one. Now,
forced
now we're
them.
seeing a reversal. Hey,
Yeah, but
remember we
now
were
they're
on it.
they're forced to kind of see outside the box.
Uh-huh.
And I think they probably created a lot of profitable models for themselves that
Hmm.
will be exceedingly profitable in this like next iteration of deregulation.
Yeah.
But how
Yeah.
fast does the deregulation come in is my question.
Uh-huh. I think it's going to be fast. One thing I know about Trump, okay, politics aside, Trump Trump's the best president for AI. And the reason I say that, as far as an investor, from an investing standpoint, politics aside, all that, okay, Trump is the best president for that because he's all about cutting the red tape. Okay. And if you go look at this, I want you guys actually to pull it up. Go look at what's it called? The National Energy Dominance Council. Okay. If you go look that up, it says while creating policies to restrict American production, the Biden administration asks OPEC to increase production to meet American energy demand. It says as energy prices rose, the Biden administration was reluctant to enforce American oil sanctions on rogue regimes. Okay, now is some of this biased? Yeah. Okay, it talks about Iran and how they were able to export 1 million barrels of oil per day and all of this other stuff,
Mhm.
and how the United States was highly dependent on China. But I'm telling you, like, I think Trump's at a point where he's made enough money, he's made enough fame, he's trying to hit a home run with he wants to be in the record books. he,
Mhm.
like, like I think he wants, that's why he's trying to get that Nobel Peace Prize, which is weird because I'm like, I never seen Trump as somebody who would want to get a Nobel Peace Prize. Like, I never knew that about him, but I truly believe that's why he's trying to end that war and between
Mhm.
Russia and Ukraine. He stated that he wants to win the Nobel Peace Prize, which is just weird to me because it's like if you look at the history of the Nobel Peace Prize, I think Hitler won it one year. So like
Yeah, it's not
it's weird. It's weird. It's almost like a Grammy. It's almost like what was that guy Macklemore when he I don't know however many of you follow hip hop, Macklemore won it and Kendrick one year didn't get it. It's like you know the the Nobel Peace Prize isn't what it's just
yeah,
popularity contest.
yep,
So
exactly.
yeah,
So
to
somebody
answer
asked
your to answer
about
your
T
question, I just think
Mhm.
its energy's gonna continue to run. Go ahead.
Sorry, I'm trying to get the
What's your
table to
thoughts?
open.
Oh, you cool. What's your thoughts on trade desk? Yeah, you go ahead. I haven't been watching trade desk.
So
See.
TTD had really good earnings, but their CEO is stepping down. And I think
Ooh,
that that was a
that's been.
really big surprise for markets.
Hmm.
So they had a massive gap down. And then on,
Ooh.
and then on the, why am I? Okay. Yeah. So they basically had, they had been already curving out a base and then we're trying to come back up to like fill the gap of a very bad, of a negative earnings response, like in the last earnings, and then this earnings came out and they basically took a 50% haircut. Um, and I part of that was because I think that everybody was really surprised by the CEO stepping down. Um, and so going into the week, a lot of people were asking me, are we going to position for earnings to kind of finish filling that gap up? And I said, no, I'm not playing that because all of my gamma was negative. My gamma was negative to the 70. My gamma wasn't negative to the 50. I mean, that's a massive drop. So I was
Mm,
expecting there to be a negative response on earnings. I didn't know why institutions were positioned so negatively on TTD. And
yeah, I'm looking at it right now.
so, and so what I did say is that looking out in time, there
See,
was a
that was
lot of
negative.
positive positioning around the 90 and the
Wow, it had a
110.
major drop off. It
Yep.
was down
But the
$34,
problem is,
38%.
yep. I mean, it's almost 50% haircut. It's
Jeez.
crazy. But the thing is that because of how far it dropped, a lot of that gamma just got then wiped out because now it's like way
Hmm.
too far away. Something that was at maybe like a 30 delta or 20 delta now has become like a 1 delta. So the
Yeah,
problem is
IV
that you
crushed.
need to have
Or, I mean, Delta. Yeah.
rebuilding of positioning into
Hmm.
that gap section in order to really get some get something. But TTD has proved that even when it has a massive base and breakout, it can still completely fail. So its ability to kind of keep an accumulation and growth kind of path going has failed it so many times. I would be cautious because of that. The chart by
Hmm.
itself is quite shocking, to be honest.
Yeah, I'm looking at it right now, and yeah, their financials looks decent, but it's not, yeah. I've looked
So
at them in the past, but I didn't like the way they moved. It was
that's
always like
exactly it.
it was always like when they went down, it went down. It wasn't, it wasn't strong. It wasn't like a stronghold. No, it was just breakdown, drop. It's like, so yeah, I
Yeah.
like them. I like them long term for stocks, but yeah, options.
And the problem they have is that even when they do badly, they magically have this capacity to keep going down, where a lot of
Mhm.
stocks would first have like a mean reversion. So kind of
Yeah,
like UNH, when they had that big
yeah,
gap
right.
down, everybody
Yep,
was like, well, at least do a mean reversion trade for a couple of weeks, and then they
yep,
give it, take the next
yep,
leg down.
yep.
But
Buyer,
this thing is like
buyers.
jumps and then jumps again.
Yeah,
So
that's crazy. Yeah, buyers take over for sellers and stuff. It's they're literally taking yeah, what do they say? Took the elevator down.
they did more than the elevator. They took
Yeah,
like the
yeah, yeah,
skyscraper, and then they jumped
yeah,
off the
something.
skyscraper, left
Yeah, that's
nothing left.
crazy.
Um, so yeah, that was yeah, that was very surprising for me that they had such a negative overall move. So yeah, I think we've covered a lot. It's already wow, it's already um, more than top of the hour. I'm not sure if there are any other. I don't know. What are you thinking about financials? Actually, that was something I want to ask you about because I know
Okay,
you trade
financials.
Visa a lot.
Yeah, I have. I've actually most of my group. I'm gonna be straight up. We've made our money on financials. Anything extra now? Anything after now is just extra. Okay. So I know Bank of America has been like booming this year. Let me look. Matter of fact.
Mhm.
Okay. So Bank of America. Well, year to date, it's been 4.69. Goldman Sachs 25.96. JP Morgan's been doing very well. Okay.
Oh,
I actually think these companies have room to go, Suze. And the reason I say that is because a lot of people hasn't haven't thought about it. I don't know if you just seen, but private capital was just given an okay to do 401ks. Okay, so they're going to be able
mhm.
to tap into that market, which is
I
scary
see.
because private equity, which is private companies, has never been able to tap into people's 401ks and pensions, and now that's
Mhm.
available. And then you got to factor into crypto too. Okay. Before the only access
Mhm.
I had into crypto with a 401k was Grayscale. Okay.
Yeah.
So what GTBC? Look that up. Yeah,
Mhm.
GPTC, Grayscale. But now it's gonna be the wild, wild west. And
Yep.
I think a lot of Trump's buddies, Scott Bessent and all the Wall Street buddies are going to be on board with this. Okay, so I still think financials is going to do well. And then another reason too, they haven't done rate cuts, right? What's going to happen
Hmm.
when they start to cut rates? Okay, home loans are going to get cheaper. You're going to start to see liquidity. I think I read somewhere where it was like what, $6 or $7 trillion on the sidelines in money
Hmm.
markets. I don't know
Hmm.
how true that is, but I seen something like that where it said on bar chart, it said $7 trillion is sitting in money markets. What's going to happen to that money when it goes from the sideline into there? That's extra
Yep.
liquidity. So
And I think for
you'll see.
a lot of
Yep,
banks are
yep,
holding a
mm,
massive amount of commercial real
yep,
estate loans that
yeah,
are
yeah, yeah.
like
Hmm.
underwater.
Hmm.
I was reading this week about the city of Chicago. basically that
Hmm.
they're having to make some massive haircuts because their real estate,
Hmm.
their school their
Hmm.
school real estate is down so much in value
Yeah.
that they can't even produce like city
Yeah.
bonds to be able
Yeah.
to
Yeah.
kind of
Yeah.
keep their head above water. So I think that if
Yeah.
rates come down, you're right. Like a lot of banks
Yeah. A
that are
lot of
holding
money.
these horrible
Hmm.
commercial loans will at least be able to start refinancing and giving new lines
Yeah.
of credit and be able to extend some of those
Hmm.
loans and have more flexibility. So you're right. I think that there's a lot of potential here
Yep.
in the financial sector, but some of these
Six.
things are really at highs.
Sue's another thing nobody's looking at too, and this is like was big on Trump's agenda coming in, the Frank Dodd Act. Okay, write that down. Somebody
Hmm.
put that in the chat. The Frank Dodd Act was 2008 regulations
Hmm.
after the bank crash, the bank bailouts, Bush and Obama years. Okay, they put the Frank Dodd Acts in place to circumvent banks from doing risky stuff. Okay, is going to deregulate that completely, like to a point
Hmm.
where and I didn't like it before. I'll be honest. 2008. Back before then, they were able to. Anybody could get a loan. Okay, somebody working at McDonald's could get 300,000, $400,000 loan. They just need to have a pulse. Okay, I'm not
Hmm.
saying it'll go back to that, but it's gonna get crazy. It'll be the wild, wild west out there. Yeah, Frank Dodd Act. Thank you, whoever put that in there. So look into that. Frank Dodd Act deregulation. In 2016, Trump was already trying to break that up. Now
Hmm.
he's going to take that all off, and the bankers are paying him, or they're pumping money into the lobbyist, like to get that taken off. So what
Hmm.
that is going to do is that's going to make it the wild wild west again, where banks are going to be making massive amounts of return. So once that
Hmm.
happens, you're going to see companies like JP Morgan, uh, even Berkshire Hathaway, Visa, obviously MasterCard, which a lot of people don't think about Visa and MasterCard being tech companies. Okay.
Hmm.
Visa and MasterCard are the number one and number two payment processors. So they're the
Hmm.
middleman. That's why when you go to a liquor store, if you think about it, how many times if you went to a hood spot, they would say, have to spend at least $5.
Hmm.
That's to cover that middleman payment,
Yep.
so Visa and MasterCard are making money hand over fist as data companies because they know how we spend. Most of
Hmm.
us at least use Visa and MasterCard every day.
Yep.
So they know
I know
how we
I
spend.
do.
That's what yeah, I do too. It's a data company.
Yeah. So somebody asked, is there any truth to the rumors of Fannie Mac um,
Yeah.
going public? Yes, I think
Yeah.
that that's,
Yes, it is.
um, I think that
That's part of
that's,
2008. Yep. Good.
no, no, I think it's in the
Yeah,
works,
it's gonna
but
happen.
I
They're talking.
how it's gonna happen that I'm not sure about, but I do think
Uh,
that it is very highly plausible.
They're talking about it. I believe it'll happen. They're talking with all the bankers and stuff, and yeah. I just seen Bill Ackerman like recently proposes that Fannie Mac goes public. So yeah, it's gonna happen. Okay.
I think like the reality is we're in this kind of situation where all the housing wealth is sitting with an older generation. They want to
Hmm.
get they want
Boomers.
to help people sell their homes because younger people need to be able to buy homes, have accessibility to mortgages. Um, but the reality is that the dollar is devaluing and they
Hmm.
have to find ways of helping um, of trying to make more money from somewhere, and this is a clean way of trying to produce more money. Now, the thing is that it's going to increase the the wealth of those who already have wealth. So things like,
Hmm.
making Fannie Mac public what is it going to do? It's going to ease buying and selling, purchasing power for those that may not qualify for any kind of mortgages. But by knowing that liquidity is going into the market, that means that asset prices will likely continue to go up. And right now,
Hmm.
housing is one of those areas where
Yep.
most people have a huge portion of their wealth. So the problem is that it makes homeowners wealthier, just like the stock market going up makes people with money in the stock market wealthier. But for the average person, for that middle class person that maybe doesn't own a home or
Hmm.
doesn't have a massive amount of money in the stock market, those wealth increases, which
Hmm.
truly, when you look at how the dollar is devaluing and how like what inflation is looking like, that wealth isn't actually increasing that much. It just
Hmm.
makes a massive distance between classes. And I think that, yeah, I think that there's a real kind of reality that
Yep.
the middle class and the lower classes, so like the bottom 60% of the United States,
Yeah.
they think all of this deregulation is going to somehow ease their burden financially. But actually, what they don't realize is that it makes those who already have stuff um,
Yeah. True.
wealthier. But if you
Very
don't
true.
already have stuff, um,
Kind of on the outside looking in.
it doesn't
Yeah.
ease your path to
Yeah.
into well like into asset
I,
ownership.
that's why I've been telling people, you know what? Sometimes it's best to get in and, figure it out later. Okay. And it's just tapping into real estate, refinance later rather than just sitting around because you're going to be sitting around forever. And a lot of people don't forget too. Mortgage rates at one point were like what 14% back in the
Hmm.
70s and stuff. So like this whole like era of like 7% or below is actually kind of new.
Yep.
Okay? For a long time, mortgage rates were like 14%, sometimes higher. So this, I know we've gotten conditioned to seeing them 7%, 5%, 3%. And if you got one during 2020, you were even blessed with what,
Hmm.
2% or no, 3%. I've heard some people the lowest, but that wasn't the norm. So what I'm
No.
telling you is like sometimes it's better to get in and then refinance later, you
Yep.
know. And Fannie Mac and Freddie Mac were created by Congress to help people buy housing. Okay, the
Hmm.
only reason it collapsed was because of 2008 financial crisis. So what
Hmm.
the government's trying to do is the government's trying to bring it back
Hmm.
and like figure out a way to make, so that's why like some of the stuff I like that Trump's doing because at least he's trying. Nobody's wanted to deal with this for years, and Trump's trying to take on a lot. Like some of the stuff he's trying to take on, I'm like, does this guy ever sleep? Like, I know it's not all him, but I'm just
Hmm.
like, and the reason I think he's trying to do it, right or wrong, I think he wants to be in the record books. Like, it's got to be
Hmm.
because he became a millionaire. Well, subjective, but he's already a billionaire. He's already owned TV. I think what he wants to do is just he wants to be the greatest ever. Okay, so.
Yeah. So we'll see. We'll see what it looks like. We'll see how it
Yeah.
rolls out. We'll see how it impacts people. I'm sure that there will be, you'll have people like Elizabeth Warren who are
Yeah.
hardcore hawks about banking regulations and things like
Don't
that.
even get me
Um,
started on her.
that will be kind of
Dude.
like banging the drum. Hopefully, we find something balanced. Hopefully we will
Yeah.
like actually take the opportunity, and if we start doing some of these actually some of these programs that it actually is going to help those who actually need them. um,
Yeah.
I don't know how that works, um,
Yeah.
just because we've not seen any of those
Mm-mm.
programs helping those that probably need
Need it
it.
the
but
most.
But the reality is, I think that we have worked ourselves into a kind of situation or system where if you are a
what,
have not, you better figure
yeah,
out how to become a
yeah,
have, because the
yeah,
system
yeah,
isn't working in your favor. It's not interested in finding a path for you if you're um,
yeah,
you're
I
gonna have to
agree.
do the hard work,
I agree.
no
And
matter how
another,
impossible it may seem.
and what are your thoughts about the Fed rates cuts happening? And that's interesting. That the Fed
Do
rates,
I
you see they got a he has a governor decided that he's gonna use to replace the one woman that resigned.
Krugler? Yeah,
Yeah, yeah, yeah.
Krugler.
It's kind of
Sorry.
interesting. Yeah, yeah.
I
Whatever
think
her name was.
so. I think the big thing is going to be the main thing is going to be, so now that, I mean, he will
Hmm.
appoint his, I think it's his, the head of his economic advisory board
Yeah.
is likely going to be her temporary.
Hmm.
He's totally like supportive of everything that Trump has done. So
Yeah. Yeah. Yeah.
he's going to be super dovish, but he's
Yeah.
only going to be there temporarily. I don't think that he'll have any like sway over the rest of the voting members.
Yeah. No, he
So
won't. He
that's
just
not
wants to
going to be a
replace
thing.
Jerome.
But I think that Waller brought up probably the best argument in the whole situation. And that is that the best thing that Trump can do is to appoint someone who, even if they may disagree with Powell, that it is somebody that Powell respects. Because even when Powell is no longer the Fed chair, he is still a governor and he will
Yeah.
still be a voting member. And
Yeah.
so, unless he decides to step down from his governorship, and if Trump becomes too weird with who he appoints as the
Hmm.
next Fed chair, and it's not somebody that's already like well known and respected and vetted, and even if
Hmm.
there's dissent, people can understand the person's
Hmm.
thesis, Fed Chair Powell may stay there as a
Hmm.
shadow
Yeah.
Fed
Like,
chair. And that's happened two previous times where
mhm.
the Fed chair
Step
finished
down.
their season
Hmm.
as the Fed chair, but stayed a
Yeah.
voting
Had,
governor
yeah.
to kind of give guidance to the rest of
Yeah.
the committee. Um, and it was positive for markets because they saw that as kind
Yeah.
of a steady
Guidance.
flow.
Yeah.
But if Trump tries to appoint a Fed chair that is not a governor that is already respected, not a governor that already is known and
Hmm.
has like a record of kind of um, policy and
Yeah.
papers and white papers that can be,
Right.
people understand their economics.
Yeah.
It will create a lot of volatility. So
Yeah.
Waller said
Yeah.
we've
Well.
already seen volatility in the market whenever
Yeah.
Trump tries to kind of
Talk
impede
about
the
replacing.
independence of the
Yeah.
Fed.
I
So
mean.
if he,
I mean.
yeah, so
I mean,
that's,
look at them when they clashed about the whole what the central bank modifications or what is it called where they were trying to do some home improvement on it, and they were talking uh Jerome Powell's like, wait, that's not this year, that's 2003. That was hilarious. Okay, so yeah, Trump's reaching for straws. He's trying to find anything and everything that he can use to pressure him. And you notice he
mhm.
backed up. He's backed off since, even after Jerome Powell. That's the thing I respect about Powell. Okay, he is independent, and he's actually Republican too,
Yep.
surprisingly. Okay, so like I respect him more. And if I had to rank each Fed chair, I'd have to say Paul Walker's number one. Uh, I would have to say Alan Greenspan is number two, even though he made some mistakes in 2008,
Mhm.
And I'd have to say Jerome Powell's. He's been number three because if you think about it, he's dealt with so much. He's dealt with a pandemic.
Mm-hmm.
He's dealt with a recession. He's dealt with Russia, Ukraine, numerous wars. He's dealt
Mm-hmm.
with Trump. Trump's a whole nother beast. Okay?
Yep.
And tariffs, and tariffs. So like I like the job that Jerome's done, and I think
Hmm.
he gives the market stability too.
Hmm.
And another thing he does differently than other Fed chairs, now I wanted to say it started with Bernard Bernanke and during his run, is Jerome Powell's pretty good at projecting what the future's going to look like. He gives you
Hmm.
kind of like a
The good
hey, look,
forward
this is
guidance.
forward guidance, and that was something a lot of people don't realize, throughout history. The central banks never used to do that before. Okay, before
Mm-mm.
it was just you found out, like you would like read the
Hmm.
morning paper and whoa, Feds raise rates, then the market would drop. And I think that's been healthy. He's been pretty good about that. In fact, he's been fantastic about that, and I
Yeah.
think that's what kept the markets going. Now, I will agree with Trump. He has been too late on a lot. He was too late with
Hmm.
the raising rates. He should have been raised rates. I,
Hmm.
I do agree with Trump on that. That's the thing about me. I can put my biases aside. Trump
Hmm.
is right. He should have been raised rates. It
Hmm.
was it was no reason. We got those what or not we. I wish I would have got one, but people got those three stimulus checks. It was
Hmm.
no reason for him to not start raising rates around that
Yep.
time because he was making it too easy to borrow.
Yep.
Okay, and that's what caused inflation. You know,
Hmm.
you know, everybody. I never seen a recession. Everybody was still shopping. I would go past malls and it was like a
Yeah.
recession was never like 2022 was a weird year or whatever. Yeah, 2022 was a weird year. It was like it was a recession, but it wasn't.
Hmm.
People were still spending. So what I'm saying is I agree with Trump. He has been too late.
Hmm.
And even now, I do agree with Trump, since I agree with him that rates should be cut based on data.
Hmm.
Now the tariffs are a whole nother beast because do I think the tariffs are going to have some what is it latent effects later on down the road?
Hmm.
Yeah, but Jerome's made a career out of going, basing his decisions off of data, and
Hmm.
if data is true, we should lower rates.
Yep. Yeah, I think that
I'm
September we get
yeah.
25 points and then another in the year,
Mhm,
maybe in November that we get another
mhm,
25
yeah.
points. And then right now, SOFR
Mhm.
is saying that we get four rate cuts in 2025. Now,
Oh,
I
wow. I
think
don't know
that
about that, but that would be
eh,
interesting.
I think Kashkari was I think he was the one that so he's not a voting member right now, but he
Yeah,
will be a voting governor in the next kind of lineup.
I
And he
like
said, I
Kashgar.
think that and he's quite hawkish. I think that that
Hmm.
he was saying no, that we should do rate cuts and then but tell the market that we are immediately going to pause for at
Yeah.
least like a couple of months after, because the reality is the labor market, though maybe there are some areas of weakness,
Hmm.
unemployment is still very,
Hmm.
very low, and labor is still quite strong in spite of the
Hmm.
fact that it is slightly weakening. And so, the worst thing that can happen is that you start creating inflation unnecessarily into a strong labor market, which will then cause,
Yeah.
faster inflation. But if the labor market is truly falling apart, then the labor market weakening will deal with inflation by itself,
Right.
because you can't have inflation when people are
Yeah.
unemployed. So,
Right.
but I think that he's very cautious about
Yeah.
doing too many rate cuts too fast. So if
Yeah.
people agree with Kashkari, then, that'll that sentiment will continue. I mean,
Right.
they'll cut, but they won't cut
Hmm.
rapidly and aggressively.
Another thing too, Suze, a lot of people aren't looking at too. The Fed has a job, a dual mandate, and I know you know this. It's what price stability and maximum employment. Okay, we
Mm-hmm.
got maximum employment, right? We got number one. Okay, price stability. Okay, we kind of got that. We kind of got that. Yes, no,
Hmm.
it's here and there, but it's not horrible. Okay,
No, inflation at 3% is not,
yeah, it's not.
well, it's not the worst for those that
It's not the
have the
worst.
means. It is the
Uh,
the worst for people who
mhm. We
check
don't
egg
have.
prices.
Yeah, yeah, and that's the thing. Okay, so the Fed has a dual mandate. Okay, maximum employment, price stability. And then, we're never gonna. I don't think we're never gonna go back to 2%, which is a neutral rate. I think
Mhm.
it'll be more 2.5. And I kind of heard Jerome Powell kind of allude to that. He was
Yeah.
like, like we might not never get. So I'm just telling you guys right now. This is my opinion. I think 2.5 might be the new neutral rate going forward in the future for America. It won't be 2% because 2% used to be the kind of like the standard.
Mhm.
It was not inflationary. It was deflation, or deflationary, which is too cheap. So
Mhm.
you kind of had it at that, So I think 2.5 will be the new neutral rate,
Mhm.
and so just telling you.
Yeah. So I think that the market is already
Mhm.
seeing all of this, and they're seeing the positivity of it, that,
Mhm.
and it's already, and I think that a lot of this is already priced into the market. So the main
Yeah,
thing
it
that I
is.
think people
It is.
have to be very cautious about is, um, that they say buy the rumor, sell the news. The rumor
Mhm.
is that there will be rate cuts, and
Mhm.
people are buying into that rumor. Once the
Yeah.
rate cuts come, the question is, do we continue to squeeze to these all-time highs? Now, I have seen now new analysts come out saying 7,000, the S&P at 7,000 end of year. Um, I don't
It
know
wouldn't
that
shock
I'm
me.
that bullish.
I'm
That
not that
seems,
bullish, but it would not shock me. You want me to tell you why? You want me to tell
tell
you
me.
why? Because look, we had our April pullback, right? We had our April pullback. Who's to say that that wasn't the September pullback that was already built in with the
That
buyer?
was
So
the
I'm kind of, yeah.
rectangle of.
That threw a wrench in everything. So now I'm under the belief that like it is possible that we could just like run through August, possibly go into September, and then you start to see the cuts, or the pullbacks. And the reason I say that is because eventually, people are gonna have to take these capital gain losses, and also
Mhm.
too, every year we know that Wall Street takes their they take their losses or cash out their gains too.
Mhm.
You're never going to go into a year where Wall Street doesn't take their gains. So I would
Mhm.
not be shocked that we don't see August and September run wild. And then I got a wild card for you. Nobody's talking about it. What if a China deal happens?
Now that would be a buy the rumor, buy the news. So
Just
it's
saying. What if a China deal happens?
that's yeah.
This year's weird. We had 20% pullback. We still haven't done rate cuts. We still got China. We still got all these tariffs. It is no. Don't be shocked if you see August and September positive,
The
which is
only
rare.
one thing that I see like possibly looming in the
Hmm.
horizon is if the courts come back and say that the tariffs have to be rolled back.
Yeah, yeah,
And
yeah, yeah.
if
Of
if
course.
that happens, the I think the biggest problem that we'll face is that the money we've collected from tariffs we'll have to give back. And
Hmm.
now that
Yeah,
could be the surprise
yeah,
event that I think no one is paying attention to,
yeah.
but Trump has started alluding to it, because whenever he's nervous about something happening that's not what he wants, he
Starts
starts
talking about other people.
criticizing people. So he's already started talking about the judges,
Obama,
all these liberal judges. If they
Obama,
and they're I'm like,
Diddy,
these are the judges you appointed, like in your
Obama.
first term, but now you hate them because they
Right,
might
right.
not side
Trump is
with you
fine.
on tariffs. But
Obama, Diddy, Roseanne.
the fact that
Uh,
he started criticizing means he's nervous. That's his tell, right? That he's nervous about something. That's why he's talking
something,
about it now. But do I
something,
think that
dude.
they're going
We'll
to
see.
roll back tariffs? I think that that's a big if.
Don't talk about Epstein like that. Let me stop.
I'll see
Okay.
tariffs roll back when I see the Epstein files.
Okay. So look. Do not be shocked, you guys, if you continue to see it roll. But at some point in time, do I see an AI bubble coming? I'm gonna just be honest. I do. I do. That's why I've been telling my students in my stocks and options group to keep cash on sidelines. Okay, because we cleaned up nice during the tariffs. I'll be honest, most of my group made massive amounts of money during the
Mhm,
tariffs, okay? Because some of them were just averaging down. I caught
mhm,
somebody, we had somebody in there. I'll say she has like, actually, you know what? They had somebody that went from, he bought a Palantir for $800. He bought two contracts, 400 and 800 for 35 strike. He bought it like 2 years ago, maybe. This guy's up like $33,000 from $800.
mhm,
Insane. So like, and then I got some other new people fresh out of like class that somebody went from like I don't know how much she's up, but I just know she bought like 10 contracts and she got some of the she bought her first contracts for like 2,000 or like 3,000 was a high. She got them like for $500. So like the tariffs we cleaned up nice. So
mhm,
it is opportunities. You just have to find them. And if a pullback does happen, I'm not mad at it because I know it's going to continue to run.
mhm,
CapEx isn't going anywhere. Google also too, a lot of people don't think about it, but Google's under investigation for a monopoly. I'm hearing that Google might have to sell Google Chrome. Google's going to continue to take off too. Okay, so Google hasn't even went on the run it needs to go too. So it's a
mhm,
lot of outliers in tech. Apple,
mhm,
if you think about Apple, Apple's been down for a while. Tim Cook's finally coming around, to easing things with Trump. So it's a weird year. It is a
mhm.
weird year. I, I would not judge this year based off of seasonality of past years.
Yeah, that's,
Just,
I
just,
think that
just,
that's
just,
very, very
yeah,
true. And
yeah,
I
just,
agree.
yeah.
I was, and early on, I was talking about the fact that like
Hmm.
people don't know what to think, and you can see it in the gamma levels because normally I would be able to see a lot of
Hmm.
strikes, all with different
Hmm.
optionality, and it's like there's like options at like 6,400, 6,450, 6,500, and then like 6,300, 6,250,
Hmm.
6,200. People really don't know how to feel and how to kind of respond to
Hmm.
the current situation. And like you said, had that 20% correction in
Hmm.
April
Yeah.
was kind of might have pulled everything forward.
Hmm.
And now things can just continue to grind up, melting up. I mean, that's the natural move of the market is melting up. It's not
Hmm.
squeezing to highs, but to go from this 3650 area all the way up to 7,000, is that possible?
Crazy. Yeah, it would not shock me. Like I said, you got all this liquidity sitting on the sidelines. What 7 trillion in money mutual markets, and
Mhm.
it's this is a weird year, and like I tell my students, just be prepared for the unexpected. Okay,
Yep.
don't assume one thing because you just don't know. And like I'll give you an example. Like when the year I probably got my well, I did get my best gains was the year when Moderna, happened, went from like $40 to like 400 something. You know,
Mhm.
I had my best gains on it. I could have easily cashed out because logic says that you can't reach all-time highs, without some time cooling off. That thing shot up like a rocket, but it was based on outside, outliers, So this is a
Mhm.
weird year. Okay. With Trump in office, then you
Mhm.
gotta think about CapEx spending. I think the company has made the best moves and nobody, I don't want to say nobody's talking about it. Meta was making these moves a long time ago. Remember when they were cutting down their workforce and
Mhm.
everybody was like, why are they laying off people? People were thinking it was just because of the economy. They were gearing up for AI to toss these
Mhm.
$100 million contracts at these these Alexander Wang for Scale AI, and all
Mhm.
these other CEOs with OpenAI. So, and then we just seen ChatGPT 5 come out, which is phenomenal. If you're not using ChatGPT, what are you doing? Or ChatGPT 5?
I think
Yeah,
I think it's funny because you mentioned it, and also Zay, when he was every time he's
yeah,
on, he's like, and I asked ChatGPT, and I'm like, that's,
yeah.
I mean,
What
it's
are you
true.
doing?
It's gonna be the Google it. It's gonna be. Did you?
It's
I don't know what the word will be to like encompass, because now people are like, oh, did you ask Grok? Did you ask
yeah,
Grok? It's like ask
chat,
the new Ask Jeeves.
chat.
Did you ask Grok?
Yeah, so it's revolutionary. I'll be honest, and I like
Hmm.
and that you know I don't know if you've recently seen, but Google CEO, what's his name, Satalia or Satalia, but he said that it's no longer optional to use AI. You have to
Hmm.
use it. Like for all their employees, it's no longer a choice anymore. You have to
Yep,
use it. You have to learn how to use it. So, yeah.
it's true.
So these companies are going to now
I
start,
mean, my dad is in his
Mhm.
70s, and my dad is using AI every single day. My
Crazy.
dad uses AI. Yes, and he's always like,
Excited.
and he's always asking me like, why didn't you do it like this? Because this is what AI told, this is how AI told me
Hmm.
to do it. And I'm like, oh
Yeah.
my gosh. So if my dad who's in his 70s is telling us how to utilize AI, you better get your act together if you're younger than 70, because my dad's not looking for another job. He already done made his money in life.
Right.
He already did that.
I will say this though. I have to take breaks from it because I find it so easy and it's so incredible that I almost feel like it's like a dangerous like slope with it.
Make you
You almost have to,
lazy.
yeah, you almost have to use your mind. Otherwise, you're gonna lose any like critical thinking skills. So I've had
You
to
need to
force
take up
myself to where,
cross stitching or
yeah,
something like that.
yeah.
You can
I've
use
had
ChatGPT to do the
um,
hard work and then use cross stitching to keep your mind young. I'm
that
just
brings
kidding.
me to another subject. Like recently, I just did it just to mess around. I did a Palantir's leverage play for earnings just to mess around, and it was losing money on this options play, even though the stock was going up massively, like $11. And then I looked it into it. Took a screenshot of the picture, sent it to ChatGPT, told ChatGPT, why is this losing money even though the stock price is
Volatility.
going, and it was IV crush, and I knew it, but the way it broke it down, it blew me away. Like I
Wow.
said, okay, I said this is crazy. I expected for it to give me a generic answer. It not only broke it down, it schooled me
Mhm.
on some stuff that I was like, wow. So yeah, you could send it a picture and tell it
Mhm.
tell ChatGPT explain this.
Nice, actually.
So,
That's a good point. And I hope that everybody is pushing
mhm,
themselves to
mhm.
try and keep learning and keep expanding
Yeah.
your limits. It's funny. I was having a conversation with someone the other day, and I was like, I don't know if it's just because of how my parents are, that my parents have just
Mhm,
been, because both my parents were from extremely financially
mhm,
poor families,
mhm.
but their parents believed a lot in education. And so
Yeah.
both of my parents were like, all my life growing up, they were constantly learning, constantly reading, trying new things, learning. I mean, I
Yeah.
remember I remember we were like one
Yeah.
of the first people to have and like to have a Macintosh at our in our home. It was like my dad's come
I wish.
because ConocoPhillips, or at the
Yeah,
time it
yeah.
was just Conoco, wanted their employees to have them to like
Hmm.
learn how to use them.
Hmm.
And I mean, for my sister, it was like life changing because she was tiny, and for her it was like her whole life she didn't know there was a world where people didn't grow up with personal computers
Yeah.
in their homes. And I can say, I mean, I must have been, I don't remember how old I was, but I mean, I remember I was probably like in junior high when it became like normal for people to have computers in their own homes and like CD-ROMs and all this kind of
Hmm.
stuff. Now we don't use any of those things, but I mean, I
Yeah,
just
no.
remember growing up, that was it was just a part of our family ethos, this that like you're
It's,
always learning new things. And but I didn't realize that that's not for like not everybody is like that.
yeah,
And
this all I know now.
and I just encourage people, if for nothing else, if like encourage your kids to always be learning,
Yeah.
because if they're
Hmm.
not constantly adapting and they're not like just being resilient, they,
Hmm.
later in life it'll be really really crazy difficult for them.
Yeah.
And I mean, that was the biggest thing, like us moving to Montenegro. But everybody kept asking, but your kids don't speak Serbian. And I'm like, 10 years ago, if I would have told you that like half of the people in Germany would be like half of the Europeans would be Russian speaking because of the war in Ukraine. I mean,
Yeah.
because of the Russia war against Ukraine. I mean,
Yeah.
you wouldn't have believed me that actually Russian would be one of the most useful languages for you to learn. You just,
Hmm.
it wouldn't have occurred to anyone 15 years ago, or even
Yeah.
Arabic. Like people would be like,
Yeah.
why? Like, who cares? Like, but I speak Arabic everywhere. I've not gone to a country where I don't
Hmm.
interact with other Arabs
Yeah.
because of
Yeah.
the war in Iraq, because of the war in Syria. Now
Yeah.
they're just this
I think it's number one,
diaspora.
isn't it? Like it's
Yeah.
number one.
But people will be like, that's such like I remember in high school, people would be like, it's such a waste of time that you focus so much time on keeping up your Arabic. And I don't know why I had like such a passion to do it, but
Yeah,
now I'm
I think it's
like,
cool.
if my kids learn if my kids learn Serbian, I don't know, maybe like 10 years from now, it'll be like actually something, a skill
Hmm.
that's useful for them to
Yeah.
have. And they're not going to lose anything by speaking
No.
Serbian.
It, it,
So it's,
it, look, I've been telling everybody this. It hurts you nothing to have multiple skill sets, multiple
amen.
languages, because you're gonna need to be able to adapt in the future. It's like, multiple income streams is a must nowadays. I'm starting to well, I've been learned that, but like it is a must. That's why recently I seen a chart where it said that electricians, mechanics, plumbers, all the jobs that they used to shit on when we were in
Mhm.
school. Remember trash man? Now they need more.
Yep.
All the jobs of teachers. Remember, I was in school. The teachers used to be like, "If you don't do your schoolwork, you're gonna become a trash man."
A
I
plumber.
know it.
That was always the
Yeah,
thing, the scariest thing. Pest control, that you're going to have to deal with the roaches, because I'm from Houston. So the roaches
yeah,
are
yeah, yeah,
like the size of your face. So it was always the scariest thing if you were going to
yeah,
do pest control.
yeah,
But man, those people are needed. You
yeah.
can't live.
I and I know it's for a fact. One guy I'm working with, he's in my stock club. I was looking at his 401k. This guy has like 700K in there. He's a trash man out in San Diego, and he makes over 120K just as a trash. So
They're
those
well
jobs,
paid.
the,
People don't
the,
believe
the,
it.
the, the, those jobs that like people talked bad about, those are the jobs that are paying now, well, that
Mhm.
people talk bad about. So yeah.
Welding, plumbing, electricians, they're getting paid well. So somebody asked, what are your educational backgrounds? So what's your educational background, Mr. Monk?
Mine's it's funny because I don't talk about this too often. Because I'll be honest with you, I think it's kind of overrated with like education like titles. But okay. So I went to school for nuclear operations, reactor theory. Okay, but I work in the mechanical maintenance area of nuclear technology, so I kind of have a broad understanding of it. I know how a nuclear power plant works. I also too have worked in gas and all different industries, and I understand how to put a plant back together. But as far as my educational background, it's everywhere. And Susan knows this. I read a lot. So like I think 2021 I read 100 books. So I read a lot. So my educational background formally, like if you're talking about, from formal education, it's nuclear, but it's broad. It's very broad. It's very broad because I don't
And
just
he does things like
yeah.
scripting and doing
Hmm.
documentaries,
Yeah.
and
Yeah, yeah. I forgot about
so
that.
he's a
Yeah.
hardcore
Yeah.
researcher. more,
Yeah,
but also in the nuclear space.
yeah. I also make documentaries too on different types of stuff. So I don't just limit myself into, one industry. So whoever asked that, that's a good question. Formally, it's nuclear education.
Mhm.
But if you're talking just as a whole, everything, I'll look at everything, every
And he
industry.
has probably, I think you could consider he has an education in marathon running. So
Oh
if
yeah,
you
yeah, yeah.
follow
I forgot
him
about
on
that.
any platform,
Forgot
you will
about that.
see all about his
I forgot
running
about that.
schedule.
Yeah, forgot about that. I don't know how. Yeah, I've run a lot. Yeah,
No,
I'm one of
but
them crazy people.
so I did my undergrad in cultural anthropology and in
Uh-huh.
Middle Eastern studies. And then I did my postgraduate work in Middle Eastern studies, and then I studied law. And then I worked in the legal field. I worked in the area of human rights. So I was an advocate for minority communities in North Africa and the Middle East for almost 20 years. And then after that, I transitioned into the financial education, economics education space. So,
Yeah. So somebody said, last question, is it realistic to turn 50K into 250K in 2 years using options? I can answer that. I'll be honest, I can answer that one. You want me to answer it?
yeah, go for it.
Okay. It is. But does it take work? Yes. Okay. If you want to get there safely, yeah, you could do it. You could go from 50K to 250K. I'll help people do it. But I'll be honest, you almost got to catch those unicorns to do that
Hmm.
in 2 years. It's got to be the unicorns. The one unicorn I will say right now, and this is a big if, I would say it's United Healthcare, because that range from 250 to 600 is so far. You got to catch companies that have big runs,
Hmm.
and you got to catch it early. You got to hit the strike way before, you almost need a 2 year run with that strike. So let's say your strike it's the price of it is 250 right now, and you have a 2 year contract, and you almost got to hit that strike early, like let's say 250 to 300, and then you have 2 year between 300 and maybe 500, 600. Yeah, you could do it. I've seen it happen.
Hmm.
So what is that like
It's like
uh
500%,
500%?
600%.
500% is not hard. It's not
Yeah.
hard at all. So
Yeah.
yeah, who did to answer your question, you would have to have multiple contracts. You would also have to have plenty of time and ability to ride ups and downs. Okay,
Hmm.
time would be the most important thing in a close strike. So,
Hmm. So, I mean, it is very possible. I know because I did it,
mhm.
and when
Yeah,
after my
yep, me
husband
too.
died, so I had to get fast. So I was
Hmm.
probably being so I use very risk mitigated strategies. So I can be more aggressive in the
Hmm.
trading. So I was able to do it in 1 quarter
Hmm.
to make that flip.
Hmm.
Do I do that every single quarter? No, because
Heck
now I don't
no.
have to trade like my life is on fire. My
Mhm.
husband, my husband can only die once. That sounds so
Yeah,
terrible to say.
yeah,
You can
no,
only face so many like life tragedies where you have to kind of get your act
yeah,
together
I hear you.
really quickly. So if you're not under any kind of like if you're not under like a desperation, you can do it. You have to do it safely. But I would say learn a range of trading
Yeah,
strategies
yeah.
because if
Hmm.
for whatever reason next year you don't have one of those, like another 25% run
Hmm.
on the S&P, the underlying companies aren't going to give you those big moves. So if you own, if you have a diverse account on your $50,000 account, let's say that you don't just only want to be 100% in options or 100% long, I should say. You could be 100% options, but
Hmm.
have a long short portfolio where you're both like selling and buying. But you do, like Derek was saying, you do need to either catch a company that has a
Hmm.
massive run that's kind of baked into the potential, or you need to know how to safely catch those
Hmm.
solid moves without putting your whole account at
Yeah.
risk.
Yeah. I will say those it's pretty rare. It's pretty rare. I think I've only done it. Well, I've probably done it twice. From like a time range, and I've had a couple students do it, but it's very rare. Would I say you should try to do it? No, because you just never know. But I've seen Moderna do it. I ain't I'm not gonna say I've seen it. I've done it myself.
Yeah.
With Moderna, actually did better than that, but that was a rare occurrence. Rare.
Hmm.
And it does take patience because you got to almost have like you gotta have the fortitude to like just stay in it.
Hmm.
Okay, for 500% it's not easy for most people.
Hmm.
Now that I'm more experienced, it's starting to become like it's not hard, but like when I first started out, like 100% was like tough. 200% was tough. Now it's starting to become like like I have a student right now, like the one I said who went from 800
Hmm.
to 33,000, I think, right now, and
Hmm.
they have time, okay, with the Palantir. That's a 2,600%. So like 500% is not hard, but you also need to catch a unicorn. Palantir is not coming like that. You're not gonna catch
Yeah.
Palantir like that
And
all
the
the
other
time.
thing, you don't want to be deploying your entire account the entire
Hmm.
time. So it is
Yeah,
500% of your 50K account, but you
yeah.
wouldn't want to have $50,000 deployed every time,
In
all the
one,
time. It would be
mm,
a lot of risk. So, but it is possible. It is possible. People
very
do
possible, but I
it.
wouldn't do it. But me personally, I wouldn't try to look at it that way. Me, I would rather have 500%,
Mhm.
if that makes sense. 100% in this one, 100% in that one, 100. It's
Mhm.
those little hits that add up.
Yep.
And I've kind of learned that over the years that like it's easier to just do 100%.
Yep.
So, but hey, Suze, I got to roll though.
Yep. It is the top of the hour, guys.
So,
So thank you all for joining us. I hope
yeah,
that you guys got something out of it. I hope this has prepared you for the economics week ahead and maybe some sectors that you can be looking at and positioning yourselves in. And both of us have our own communities. If you want a
yeah,
swing
yeah,
trading
yeah.
community, if you want to learn the basics of options
Hmm.
trading, Derek runs his own
Yeah,
classes
yeah.
for entering
Hmm.
options. And if you want to learn how to use
Hmm.
diverse strategies and to do
Hmm.
systematic trading, then you can also
Yep,
consider joining
yep.
the Trade
Agree.
Speakeasy. So, follow us and you'll see all of the different activities
Yep.
we have going on, friends. Thanks for joining me tonight, Derek. It was nice to
Yeah,
have
yeah,
you
yeah,
on your
yeah.
birthday. And really, I hope I
Uh-huh.
blessings to you.
Yeah.
Amazing year
Thank
ahead.
you.
I
Yeah,
hope your business triples in
yeah,
size
yeah,
over the
yeah.
next
I
year.
appreciate you. One of the best people to work with. So,
Thank you. I appreciate that. All right, friends, I'll say good night and goodbye for now. Ciao, Derek.
yeah.